Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing HIMS and HERS stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 2.9 billion market cap. They're trading at $13.33 a share, and they have 214 million shares outstanding. HIMS and HERS is a telehealth company that sells prescription and over-the-counter drugs online. They also sell personal care products. It was founded in 2017 and it reached a valuation of $1.6 billion after closing a deal with Oaktree Capital Management to go public via a SPAC, a special purpose acquisition company. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. A really big milestone, they hit positive free cash flow in 2023. Just a few days ago, they completed their 2023 fiscal year. They had positive $47 million of free cash flow. That gives them a margin of 5%. Which means they convert 5% of their revenue into free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's negative every single year. But the negative was biggest in 2021, negative $108 million. And it's down to negative $24 million. So this year, they should be profitable. Revenue is a sales for the company. So they are one of the many companies that sacrifice profit for higher revenue. And they've done great in this category. Their revenue grew 83% from 2020 to 2021, and then nearly doubled, grew 94% into 2022, growing another 65% to $872 million in 2023. So really impressive growth. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows, past year 4, that's $3.9 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $3.4 billion. We divide that by 214 million shares. And we get a calculated stock price of $16. They're trading at $13, so they're trading at a 15% discount. It's a buy according to the model. The last time I did a video on this company was in August, so about 10 months ago. They were trading at $7. My target was $13.58, almost exactly where they're trading at today. There are 26 companies in the same industry as HIMS, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx, only $26 million. Procter & Gamble spends the most, $3.2 billion. It appears they're debt-free, a 0 debt-to-equity ratio, the best on this list. They don't pay a dividend. Their free cash flow is a little less than the median. Their market cap is almost identical to the median, a lot lower than the average. They're trading at 6 times book value. We can't look at their PE since they have negative earnings. They're trading at 61 times free cash flow, but that number should improve a lot. Now that they have positive free cash flow, they finally passed that break-even point, so we should see some major growth in 2024 with this company. They trade at 3.3 times revenue, a little worse than the average. They don't generate much revenue, half of the median, and we can't look at their 5-year annual revenue growth rate. They haven't been public that long. Look at e.l.f. Beauty, 27%. That's pretty high. Let's go through their 10K. We'll start with their income statement. This shows us 2021, 2022, and 2023. Really amazing revenue growth. Under 300 million to little over $500 million to 870 million. Let's get a breakdown of this number so we know what it is. They only give one breakdown of their revenue, online and wholesale. Of the 872 million, online is 840 million, wholesale is 30 million. Online revenue is up 68%, wholesale 21%. Total revenue is up 65% when you compare 2022 to 2023. Last year, they grew online and wholesale over 90%. Their subscribers tripled from 2021, 550,000, 1 million, 1.5 million currently. And the monthly average revenue per subscriber is up a little bit from 51 to 54. The average order volume is up a lot more, from 74 to 97. Let's go back to the income statement. Cost of revenue, all the expenses directly tied to generating the revenue, is $157 million. Their revenue went up 65%. Cost of revenue went up 33%. Since cost of revenue went up less than revenue, their margins are improving. Their gross profit improved 75% from 2022 to 2023. In 2022, it's $408 million. 2023, $714 million. Their gross profit was 75% in 2021. 78% in 2022 and 82% in 2023. Those are really good margins, over 80%. That means they convert 82% of their revenue into gross profit. Let's look at their operating expenses. Marketing, $446 million, up 64%. Operations and support, $120 million, up 55%. Technology and development, $48 million, up 65%. G&A, $130 million, up 32%. So their operating expenses are $744 million, up 56%. Since their expenses increased less than their gross profit, that means their operating loss is getting smaller. Their operating loss in 2021, $115 million, 2022, $69 million, 2023, $29 million. They should have positive operating income in 2024 if they continue on this trend. Their net loss for the year is $24 million, which is better than last year of $66 million, and before that, $108 million. Let's take a look at the balance sheet. Current assets of $265 million, current liabilities of $88 million, so their current ratio is well above 1. They have over $200 million of cash and short-term investments, $22 million of inventory. They give a breakdown of the inventory: $15 million finished goods, $7 million raw materials. They have a lot of goodwill, $111 million. Their total assets, $440 million, up from $366 million. They have $97 million of liabilities, up from $55 million. Their biggest liability is accounts payable, $43 million. This is how much money they owe others for buying on credit. Assets minus liabilities equals equity. They have $344 million of equity. They raised $700 million from selling their business, and they lost $368 million from running their business. Let's look at their statement of cash flows. They do have positive operating cash flow for the first time. It was negative in 2021 and 2022. It's positive in 2023 at $73 million. The main reason it's positive is because they pay so much in stock-based compensation, $66 million. That's why they had negative net income. But the way you calculate operating cash flow, you start with your net loss and then you add back the non-cash items on the income statement. They spent $17 million on PP&E, a lot more than prior years, and they did buy back $2 million of their own stock. There must be a reason they bought this back. They need the cash flow. They can't be buying back stock or paying a dividend. Let's take a look at the stock on Simply Wall Street. Its last price, $13, $2.9 billion market cap. Up a whopping 42% after solid earnings just this week, up 16% in the past year. So before this week, they were down for the year. Let's learn a little more about the company. HIMS & Hers operates a telehealth platform that connects consumers to licensed healthcare professionals in the US, the UK, and internationally. They offer many different prescription and non-prescription health and wellness products. Also services available to purchase on its website and mobile application. They provide prescription medication on a recurring basis and ongoing care from healthcare providers. Also over-the-counter drug and device products, cosmetics, and supplement products, primarily focusing on general wellness, sexual health, skincare, and hair care. I used one of their products for nearly a year for hair. It didn't really help. In addition, the company's curated non-prescription products include melatonin and biotin in the wellness specialty category, moisturizers, creams, sunscreen, serum, face oil, and face wash in the skincare specialty, condoms, climax delay spray and wipes, vibrators, and lubricants in the sexual health and wellness specialty, shampoos, conditioners, scalp scrubs, and topical treatments such as minoxidil in the hair care specialty category. It also offers medical consultation and post-consultation support services, as well as health and wellness products through wholesale partners. They're based in San Francisco, California. Here's the stock price since they started trading. They started as a SPAC, so it was $10, and it looks like by the end of 2020 it started trading. It shot way up, as most SPACs do, then came way down, as most SPACs do. But HIMS is a positive story because they've actually come back up. So they're trading above their SPAC price, the $10 price. Most SPACs just go down and down and down and never come back up. Simply Wall Street's valuation is $50. They're on another planet. They say the stock is 74% undervalued. 12 analysts priced this stock pretty much where they're trading at. Their revenue target for 2024 is $1.2 billion, 2025 $1.4 billion, 2026 $1.8 billion. Their free cash flow target for this year is $90 million, next year $164 million, then $243 million. So they're expecting lots of growth with this company. You can see they had some debt in 2018, $8 million, but once they went public, got some money, they paid off that debt and kept it that way, so they have no debt for the past few years. This blue line is their equity, and it's gone up to $355 million in 2021, and it's pretty much been flat since then. This green line is their cash. It got up to $320 million in 2021. It's currently $220 million. The CEO's salary was $250,000 in 2019. It's currently $600,000. And his total compensation is $11 million. Tenure as CEO is 7 years. In the past year, there's been only insider selling, no buying. The biggest sell was by the VC firm Redpoint. They sold 2.3 million shares. 54% of the companies held by institutions, 1/4 by the general public, 14% by individuals, and 7% by VC and private equity firms. The CEO is the biggest shareholder at 9.5%. Then a VC firm, Institutional Venture Partners, owns 7.3%. Then Vanguard, BlackRock. And there's lots of names you probably haven't seen before, because they're smaller private equity and some hedge funds. They've increased their employees a lot over the years, from only 131 in 2020 to 1,000 currently. And the ticker trades on the Deutsche Börse and New York Stock Exchange. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.